Cryptilians and crypto crackheads, my viewers have spoken. Third time is the charm. I've fixed my noise issues. I've fixed my noise issues. Oh, goodness. Hopefully this works, but I'm going to do an abbreviated version, hopefully. So let's jump right into it. This is going to be a library video, and really, third time's the charm. And so I have stupid Tim behind me here because I'm obviously, actually, my nice 9-year-old daughter chose to do that. So I thought I'd appropriately leave that up, since I obviously don't know how to work a microphone. And I guess I don't even need headsets. I don't know what I'm doing with those. This will be a library video for market tops and when to get out. So abbreviated version here. In trading and not getting wrecked with money, there are two super important things to consider. First is your entry. Second is your profit taking. Buying dips is a specific form of entry. Buying moving averages, crossing, is another form. And exit strategy, full-on exit strategy out of crypto to get your dollar safe so you don't ride down the whole market, is a specific type of profit taking. So this is going to cover exit strategy based on best, postulations and projections of when the fun's going to be over, really. Because my channel is for retail investors. Retail meaning you were not here for the bloody 2018, boring 2019, boring 2020. It came plus or minus around January 2021. However, for these future cryptilians and crypto crackheads referring to this video, this is going to serve as your basis of knowledge on how crypto works in 4-year cycles roughly, and why. All right, so here I'm going to have 4 different graphs to try to attempt to complete, what we cryptilians and crypto crackheads do. 5, we always have 5 things in mind. 3 most probable, and 2 what ifs. So these vertical lines represent Bitcoin halvenings. Halvening means the block reward. I'll explain that here in a second. Means the block reward is halved. A block reward essentially is like money printing. Miners that cost a lot of money that spit out tons of numbers every second, like I think it's in the hundreds of thousands per second. They spit it into an algorithm, which is essentially like a tunnel of confusion, and it spits out some result. When a miner, which is some electrical device with a lot of computing power towards one thing, that one thing is spitting numbers quickly, that's connected to the Bitcoin blockchain, and it's attempting to find a solution. And that solution, you cannot just know what input's going to find it, because that algorithm mixes it all up. It's like a mixer, and it spits out an answer, and it's, I guess, roughly random, sort of. So that is how a new Bitcoin is found. There is or a new block is found. The reward to the incentive that the Bitcoin code gives, or the program gives, for people to invest money and time and effort into setting up mining, which keeps the network safe. It essentially keeps Bitcoin as decentralized as possible through creating incentive that you are spending electricity and essentially checking the public ledger, so that many people all around the world are verifying this is right, this is right, this is right, this is right. So if there are 100,000 people doing that, and one sends, I'm going to try to double spend my money, spend it here and try to erase it from there so it doesn't look like I did, but I actually already paid, and then I get to spend the same Bitcoin twice, or the same Bitcoins twice for a large purchase like a Tesla, that you can't erase what was publicly already known. And therefore, there would be more than 21 million Bitcoins in existence if you could do that, a double spend, essentially. So it's essentially cheating, and all the other miners around the world would kick that out. So there is incentive created, and it's essentially kind of like the Fed, who prints our monopoly money here in America. Your government, whichever country you live, your government's printing your monopoly money, probably with smiley faces on it or frowny faces on it. But you have monopoly money, and we're in this for Bitcoin, the real form of money, if I may be biased for a second. So it was created, the founder, Satoshi, knew that there needed to be incentive. When the last Bitcoin is mined in whatever year, 2043, on the 21st million, there will never be 21 million one Bitcoin. When that 21st million is mined, the price of Bitcoin and the adoption of Bitcoin, this is all planned. Like, he knew that it would take, potentially 30 years to be adopted as a real form of payment, because credit cards took, so in America, credit cards after their inception date, I think it was Visa or MasterCard, something like that, 20 years. It took 20 years for half of the adult population in the United States to use credit cards. So adoption rate takes a while, especially for something like Bitcoin, right? So that was anticipated. The incentive was anticipated based on that adoption rate. And he thought about all this in the code, and it's just going. Like, they're not changing it. It's just all thought about and planned. The code is in motion. But anyway, he knew that the incentive could wane, because after adoption took place, there would be enough incentive in transaction fees, similar to how Visa, MasterCard would charge a place of business like 0.5% or 1% of all charges. Visa gets that because of the ease of swiping a card and transacting money. So Bitcoin will essentially be kind of like a Visa or MasterCard in the future. There's a small charge to transact money. And with enough adoption, that small amount of transaction fee will be enough to keep enough miners having incentive to keep paying for electricity, and miners to keep verifying a place crosses in the world, right? So these vertical lines are based off the halvening of the incentive. The incentive becomes half, right? And what a block means is it's all of the transactions within 12-minute time frame. So it goes by 12 minutes, kind of like a dozen eggs, right? And so it's a record of information, what has happened, what has been sent to the Bitcoin blockchain within those 12 minutes, and then boom, sends it out and people get paid, is what's happening. And there's incentive. So the incentive is halved it's roughly every 4 years. Now the block reward automatically becomes more difficult the more miners there are. So if you imagine a cave, two identical caves in alternate universes, but they're completely identical caves. All the gold within the cave way down low is in the exact same spot, in the exact same quantities, portions. Everything's identical. Everything's identical but one thing: the amount of miners looking for them. In one alternate universe, you have 5 people. In the other alternate universe, you have 500. So what Bitcoin's algorithm does is, in the case of 500 miners, they need to make sure that those 500 miners find gold at the exact same rate as 5 miners would. So what Bitcoin's algorithm does is it adjusts the difficulty, which it's called mining for a reason. It's literally like mining diamonds. That's the whole point. It is proof of work. It takes work to mine diamonds. But anyway, and there's all other sorts of proof of staking, proof of this. They're getting fancy with how you do it now. But anyway, the OG coins use proof of work, takes electricity, unless you have renewable sources of information like windmills, which I will probably have within 5 years, so I can mine with only the initial investment of a miner, which I'll probably buy in bear markets. But if you don't have free electricity, I do not recommend getting into mining. You will get crushed, because there are plenty of people out there mining Bitcoin with literally free electricity in China and Russia, or electricity that costs a penny per kilowatt hour. At least where I live, it's about 9.3 cents per kilowatt hour, so I can't compete unless things are going parabolic. Therefore, miners cannot buy mining equipment fast enough to keep up with that in terms of competition and profitability, to make profitability back to where it was, to where only people with cheap electricity can be profitable. But anyway, so that is kind of the basis behind a lot of the pumps and, I guess, I don't want to say pump and dump, but the parabolic cycles we go through and the crashes, 85 to 90% corrections Bitcoin goes through. It's all based on that. So if you want to understand when to get your money out of Bitcoin, you have to understand why that is. So that's the gist of it, right? So Bitcoin's algorithms per how many people are involved with mining, the more miners, the harder it gets, so that those 500 miners, for one strike on the rock, the rock gets harder in that alternate universe cave. Even though the gold stays the same, it's in the same spots and the same portions. What Bitcoin does is its cave, the rock gets harder with those 500 miners, so that they have to strike in the same spot 100 times to get the same effect as one miner in one strike in the alternate universe would get, like chipping away amount of block. It would be 100 times more difficult, literally, so that in those alternate universes, in Bitcoin being mined, the 500 find ounce of gold at the exact same rate over time, over a year, as those 5. So sometimes, for example, a Bitcoin can be mined in 8 minutes, can be mined in 28 minutes, for example, but over time it will average 12 minutes. That's how that works. Because, I mean, think about it. It's literally like mining gold. Sometimes miners will have a great day. They'll find way more at a faster rate. Sometimes they won't. But all over time, it will average out. So that's pretty much the cycles and the reason behind it. So what we need to do here in this video for future reference and for cryptillions and crypto crackheads is we need to know when to get the hell out because Bitcoin last time took an 83% dump. Ethereum took a 94.3% dump or something, 94.7% dump, or not 97, 94.7% dump. So you don't want to see your $1,000 become $15.60 holding Ethereum, right? Or in Cardano's case, $1,000, it became it came under 20 bucks. It was a 98.77% decrease. So we need to know how to get out of that before it happens, right? But also not to sell too early because the parabolic stuff, you want to ride that because it's glorious. The way that happens is when Bitcoin really hits the news, a lot of people who never talked about crypto before, you're going to hear about it. And when that happens, okay, this isn't in the charts that you're seeing, but I'm telling you, on a personal basis, that is when you know you need to start getting out. Is when you hear people who have never talked crypto before talking about it. That's the time, all right? And so you have about 3 weeks to get out, roughly, or 5 or something. It's not much time. That is when it happens, okay? I remember, I'll never forget, I was at a funeral in 2017 and around November. As one of my buddies, his dad passed away, as we were trying to make small chat, waiting in line for an hour, people were talking about crypto. They had never spoken about it. I mean, hell, I hadn't at the time. Well, I had been in the game for like 6 months at the time. Still didn't know what the hell I was doing. That's why I have this channel for you, so you can learn what I've learned over these 4 years as I stayed in the game. Spent 20 hours a week, sometimes 15 hours a week, learning crypto, investigating, figuring out how to profit from it, all that good stuff. So now I'm trying to dump all that on you so you don't get destroyed and so that you could potentially change your life here in these short months. Because the party will be over, it won't go up forever. I know that a lot of people think it will, but it won't. And you will get destroyed if you don't know this. So we're going to try to figure out when to get the hell out, right? So that's what we're doing here. So 4 different graphs. That's the meaning, the basis behind a lot of the lines that you'll be seeing here. This is a logarithmic curve. Logarithmic being defined as loosely here. So see where my cursor is hovering? It says $1.10 and $3.50. It is the same distance to travel this distance of $2.40. So it's the same amount of space for those $2.40 as it would be to go from 100,000 to 300,000 for $200,000 of move. So that's what logarithmic means, because the reason why you have to use log charts for all coins, even if hasn't gone skyrocket, it doesn't matter. You need to use log charts because Ethereum, Cardano, Bitcoin use it, because if you didn't use log, and if you're using TradingView, make sure you're using a logarithmic chart, not linear. For Bitcoin though, if this screen were linear, you would need an IMAX to see it. Literally, like for real, in IMAX. I mean, you would need like 15 to 30 monitors to see all this stuff, right? So that's why log chart. All right, anyway. And so if you're getting in and out of trades or whatever, depending on how active you are, even the 1 trade a week or whatever, you need to be on log chart for everything. There might be some exceptions, but that's the general rule of thumb. And I only use log and it works really well. Okay, so when to get out. So we could see here that that from the halvening to the top was a year, exactly 12 months, November 2012 to November 2013. From halvening to the next stop was May 22nd, so let's call it June 1st. That's 1 year. 13, 14, 15, 16, 17, 18 months. So the trend is it gets longer and longer from the halvening. But also what we have a competing trend is that the tops typically happen around December, around Christmas. Why? Because taxes. People need to get out of it so they can pay their taxes, essentially. And I mean, taxes in China and Japan, I think, work about the same. It's they use the whatever it's called, Gregorian or whatever, the European standard for. Even though there's a Chinese calendar, I think by taxes, Chinese are taking profits in December for similar reasons. So even though the market should get longer, I personally anticipate that it's a competing trend. It should get longer and longer. So if the halvening happened to happen on a different, month where it would only allow for 12 months to get to December, I would guess that type of cycle would actually last until the next December because the bull market wouldn't be over that early. And so you have two competing trends. It'll get longer and longer. And the reason why it's getting longer and longer by most people's guess is this. For example, gold, when it was under $300, its market cycles, to get to a high, to chill at coolest tits, and to break its high, so on and so forth, it was in the matter of months or years. Now it's by decades. It has not reached or broken its all-time high, I think, in 12 years. It's a bigger asset class. It moves more slowly. It takes more money to move it. Therefore, the whole, any life cycle it had is being extended like a tortoise at this point. So Bitcoin is its market capitalization, which means how much money is in it. For example, gold has 7 trillion. Bitcoin at this point in March 2021 has $1.1 trillion in it. Its asset, as an asset, its market cap is way, 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 way bigger, like 10 times bigger than it was, and like 1,000 times bigger than it was back here. So it's going to move slower. So from halvening to top should get longer and longer. However, you have a competing trend that December. So how do you mix these two? Well, let's look. This past halvening was around June, it was May 22nd. So if we go 1 year, June to June, okay. Now we go 6 more months. So June is the 6th month to December. If I can do this right, to December, that's 18 months. That would put it equal time from this halvening to this one. All right. So it's possible that it goes until December 2022. Or it's possible that it just goes a little bit after January, or a little bit after December. However, there are some ideas that you might base it off the point where the number of months on average after Bitcoin passes this red line, your parabolic cycle will end on an average rate, regardless of December, regardless of anything of the halvening. After you pass this point, you have a certain amount of months because you're going to hit the top by going parabolic. And here, there are other charts, but they've averaged. So let's say like this line here, it only had 4 months. On this line here, it had about 5 months. So once we pass this line this time, which we have. So see on the very right-hand side, the price changing up and down in the black box. We've passed this, and it's March, and I have it on March 2021. So through that trend, party could be over in July. However, based off of that kind of, postulation or projection, by going off this middle point and how many months until the parabolic cycle's over, that's a third competing thing. It doesn't align with the fact that the market cycle should go longer than 18 months because it's a bigger asset class. It goes against the theory that it has to happen in December. But that's a what if. So 5 things, 3 most probable, 2 what ifs. That's a what if, absolutely. So, and if it maybe gets extended a little tiny longer, like July to October, party could be over. We might not have much time here, guys. That's a what if, but I don't think it's most probable. I think the most probable is December of 2021. So this chart tries to guess price at tops and bottoms, not the timing. This does not guess timing. So the reason I like this chart so well is because it got it perfectly right. This was made roughly in July 2018, and hindsight bias, now that we know to where it got down and what month and year, Bitcoin crashed and found a bottom in January. So this graph says if crash in January, then price cannot go below, look at the right hand side, around 3,100. Where did price go? Like 3,280. Where did it range out at? Between 3,280 and 6,000. What's the upper line here as we go on? 6,000. This trend got it right. So let's try to go to December 2021, even though this doesn't project time. If we go up here, I think in my last video I thought it was 1 million, but it's 122,000. I was off by a digit since there are no commas. So this suggests the market top, if we're going to guess this December, 122,000 at the very maximum. And let's say it crashes for however many months, it might crash down to 70,000. And that's actually not far off from my personal projections, which we'll see here in a bit. So that's one chart. But we need more probabilities and different ways to get to it. So this uses a logarithmic chart, but it's trying to get the timing right and the tops and the bottoms right. So this is trying to do three things, but in a very different form. So if this comes to a similar conclusion that I'm thinking around December 2021, but perhaps a little longer because the asset class is bigger, then I think that would make it more probable getting to the same idea through a totally different means. So the means through which this has, it takes its all-time high at touching the logarithmic chart, makes a right angle with it, and it stops. The horizontal line stops where the halving is, goes down, starts this triangle, touches the top, goes straight over at a right angle, stops where the halving is on the vertical line, straight down, touches the next top from that point, straight over right angle, stops at the halving, goes down, so on and so forth. That's this one's strategy. So this one thinks the timing will be late January. Does that align with what I just said? Heck yeah. Does that make the idea that December, January tax season is a pretty good theory and a fairly probable theory? Yeah, I think so far. A totally different means of getting to the same idea. Let's see here. So this thinks the top might be 83,000. I think that's really low. So I think in terms of price, that this graph represents a what if. In terms of time, I think we're on the same page. Let's go to the next one. What this chart does, it's a totally different mean. So what this does is it measures, it measures from top to bottom. No. It takes, I think it takes capitulation. So it's the length of time sideways, and then wherever it stops at capitulation, that is the height of the box. So it's a square. It makes a square. So if width X, then height X. Height and width is the square, same. So this kind of measures that out too, does the same thing here. And this one makes a guess by trying to fit it inside the logarithmic scale, which is getting lower. So as you can see here, we going through another way, this is coming to a similar conclusion that I did. Perhaps making my idea of an asset class that's larger taking longer time, this is kind of going with it. Look at this green bar, the amount of time the bull market went, 364 days. Amount of time the bull market went, 518 days. The projection for this market, 742 days. Maybe not that long, but where does that put it? May 2022. Same thought process, all right? But I think this is more of a what if. What price does it give? About 180,000. So that's pretty close to my lower end projection of 200,000. You'll see why I project that here later. This graph also is based off of the height of the tops and kind of making right angles the other way to the previous halving, and then measuring from top. So this is the top, this is the capitulation. It's kind of measuring both. So it's doing something similar, but it's kind of combining. So what this one is suggesting is from capitulation to top is 1,064 days. From capitulation to the next top will be almost identical. It's kind of what I was thinking. And so it should land around December. Yeah, so this one thinks tax day is kind of like, this kind of is in theory with mine. Does it give us a suggestion of price? No, it does not. This is trying to get the timing right. So if you can see here, we have what ifs of May and perhaps like this July through October. Probable is November, December, January, February, something like that. So timing wise, you need to be prepped to get out. If things are getting real hot and Bitcoin's all over the news, around July 1st, you need to start planning to get out. Maybe not pull the trigger, but plan to be super ready. Because when it happens, your account will go down 30% in one day. I mean, hell, that can happen during a normal bull market anyway, but not in one day typically. It takes a few days. But altcoins can move 30% down in one day, absolutely. But if Bitcoin goes down 30% a day, guess what your altcoin does? Down 70% a day. It will. So this is why it's so important. And you won't have time to sell back up high. It won't do it. It won't. Now it'll come up, from 30% of the height. It'll wiggle, make an oscillator, but you'll never be able to get out to where at the point you were. So you're essentially trying to plan to get out, before it really starts capping. You make a guess. Okay, I sell 10% of my bags here because I think it's going parabolic. You don't sell all of it because it's probably going to keep going higher than you think. Okay, then, it's still going higher. I'll sell 10 more percent and get into stable coins or US dollars. Still goes higher. 10 more percent. 10 more percent. We got to be getting close. And then it tops and starts dropping, and by this time, hopefully you've sold several 10%, and then you could sell the rest what you haven't sold on the way down. You can't get the top perfectly. Don't expect to. It's impossible. You cannot guess it. Guessing time is a better way, but things could double within 2 days at the end of the parabolic cycle. You might feel like, I need to get back in. No, you don't. If you only missed by 2 days and things double, it doesn't matter. You wouldn't want to get back in because it's going to tank on you. And you're going to be buying a top. People love buying tops. Humans love buying tops. They hate buying bottoms. That's why people like me, I was buying bottoms and I'm in green no matter what happens because, people hate buying it. That's why I was buying it when people hated buying it. But people love buying tops. But that's when you need to be selling. It's when you need to be selling. You can't sell a top unless you're selling stratified, 5% this day, 5% next week, 5% next week. And then 5% can be sold at the top. You can't sell everything at the top. It is unwise to think that you can because you cannot. If you see throughout your lifetime 10 tops, you might guess right once. But it's a bad bet to try. All right, so you kind of like average cost dollar as you sell. But you can get a feeling when people start talking about it, who never have, when it's on the news, when the candles of Bitcoin go higher, and like higher and it's screaming, like you need to know it's about time. So July 1st, if all that stuff isn't happening and Bitcoin's kind of ranging out, okay, it hasn't gone parabolic. Okay, okay, I'll keep an eye on October. It doesn't happen in October or the parabolic cycle begins. Well, it just started getting parabolic, so I have more time. So, all right, we're probably looking at November, December. You need to keep this in mind. You need to be watching the Bitcoin chart come July or late June. I know, if you like altcoins a lot, it doesn't matter. If you like your altcoins and the money in your altcoins, you need to be watching Bitcoin, period. All right. So, my personal projections, are around December. So my green lines are the years. I essentially connect the tops, connect bottoms, vertical line for this. This is a logarithmic chart. So technically it is curved, but you can't see it here. And I project it's going to go roughly from 200,000. It's going to fit somewhere in this triangle here. So like boom, boom, somewhere there. So between like November, December, this triangle here. So I think it'll hit between 200,000 and 300,000 roughly. But if it gets in a short squeeze, when exchanges try to, because everybody's going to be trying to short around here. And if people are kind of guessing it right, exchanges will be able to read the order books. They'll be able to use their own money to push through it so they can earn tens and tens and tens of millions of dollars doing so. Even though they're spending their own money to push the price up, they're going to be wrecking shorts, liquidating them, people betting that it'll fall, but it keeps going up. The exchanges take your money and they earn tens of millions of dollars. People over leveraging themselves, they get liquidated, which means you agree that the site takes all your money. Like you agree to it during leverage. And it might short squeeze up to, my guess is like perhaps 325,000. It could go higher because that's a very small percent. Like that's only 8% from here. I mean, so from 400,000 to the line, it's only 27%. 27% for a short squeeze ain't that much. So this really could go up to 400,000 in a short squeeze. But it would only be a wick. So it would still satisfy this because the wicks can go through on a week. It might all happen in a matter of days. So you see how all these candles, see this like red wick down? There are wicks up too. See this big red wick? That means price went way up here and then it fell down. And see these long wicks here? Like it could just be on a wick to wreck people and then screams down, right? So this could go, and that's what I mean by in 2 days things will double. Like they literally can. So if Bitcoin moves 20% in a day, that means your altcoins typically can double, like in a day. And if you just sold and it doubles the next day, I suggest that you don't be lured to getting back in because it's going to tank on you. That's why entries are so important. And if you took profit at a good point and it's profitable and things are skyrocketing, but you had a system and you had a rule, like don't break a rule and get back in as things are skyrocketing. You wait till it cools its tits because, around this time, that means probably it's going to tank and it won't come back up for 4 years. So that's my projection. So that's pretty much what I got for you. So real quick though, market tops. Oftentimes, Bitcoin will find on the weekly, so it's RSI, it'll make higher highs multiple times. So here it made its highest high, it broke its all-time high. See how high the RSI was? Well, the next time it makes an even higher high, the RSI will be lower. The next time it makes a higher high, the RSI will not necessarily be lower than this one, but it'll be lower than the original super high. All right, in a parabolic cycle, what happens is it blows off. So it makes the highest high and then it's done. That might not happen. It might just make another higher high and only go as high as one of these two, but not as high as that. So it's usually about a 3-strike rule. That time it got a 4-strike. So one no-brainer way to kind of figure out, okay, am I about ready to get the hell out of all of my coins here in crypto and move into something stable like stable crypto, stable coins, DAI, Tether, whatever, USDC, TUSD, whatever, or just US dollars. A no-brainer way is looking at the RSI on the weekly. It's really that simple. And let me show you. I had been posting, trying to help my crypto friends on when to buy back. Like literally, you need to be saving all the money. Like sell a card, doesn't matter. You need to be ready for the moment that the RSI on the weekly hits at the same level as it hit last capitulation, which was, I think, 37, 35. And then I said, right when RSI gets below the red line, it'll dip below. Once it gets close to 35, that's when you need to buy like as much as you can. And it got down to 36.5. And I was right. And it's going to happen again. It's going to happen again. So if you try to stay in crypto and you got into stable coins, you can literally buy back almost 10 times. I mean, no, in altcoins, you could buy like 50 times the amount of coins you had with the same amount of money if you buy it when Bitcoin does this. Just literally look for the RSI going below the red line on the weekly. So I look up here, weekly. That's when you buy back. It's that simple. So to look for market tops, it's also that simple. RSI on the weekly, at least 3 strikes. And if, so on this one, a lot of people, for that reason, because it follows the 3-strike rule, a lot of people thought this was the top. But you can always judge. How does it react off the weekly 10 moving average or the weekly 21 moving average? So look, here 21, strong reaction. Here 21, strong reaction. Here the 10, strong reaction. So right here, if you sold everything here on the 3-strike, sold everything, that's fine. Because look, if you start seeing that strong reaction, you're still buying your crap back below the point you got out. So it's okay to sell when you're wrong. Because if you see a strong reaction off of the weekly time frame, the 10 exponential moving average or the 21, just wait, because it might skyrocket back up. And when it does, it'll go parabolic, especially if there's been a 3rd strike. So this is the no-brainer way to do it. But The reason why I went over the graphs and the happenings and all that stuff is you need to start getting that feel of when I should start looking out. And you need to have a game plan ready. And I think throughout these months now, like, you need to have a game plan ready. Like, you know exactly to which exchanges you're going to put your stable coins. I wouldn't, if you come out of this with like $500,000 or something and you want to lend your 𝐑𝐼 or Tether to an exchange for like insane rates, like 20%, you can live off that. 20% of 500,000, $100,000. It's $100,000 a year, just interest is coming to you, and it's paid daily. But it'll be $100,000 over a year. But you want to have that plan because some exchanges, they might go down, and you don't want all your money in one. So you need to have a plan of multiple exchanges. In case one goes down, you don't lose all your money. I have 4 in mind, and you might not want to hold it all in Tether or all in 𝐑𝐼, because what if one of those goes under? Not just an exchange, but the project. Like the SEC sues Tether and it goes under, and you had all your crap in Tether across multiple exchanges. It's gone. So, you might get some in actual US dollars, some in 𝐑𝐼, some in TUSD, some in USDT, which is Tether, some in USDC across multiple exchanges, earn an interest, wait for that bottom, and then with interest, you could buy like 80 times the amount of crypto you had. Just wait for the RSI on the weekly. So, guys, stay safe out there. I hope that this was educational. I hope you could freaking hear me the whole time. Jeez, Lord. Oh, goodness. Sorry about that, guys. So my daughter wrote that, and when I saw it, I was going to erase it, but then I realized what I was sitting down to do to record this video for a third time, and I was like, yeah, I'm keeping that. Stupid Tim. Take a look in all its glory. So anyway, so this will go down in the library, and we'll catch you guys later.